All right, let's jump right into today's market action. Today was one of those days that makes you scratch your head. On one hand, the Dow Jones rockets to an all-time high. On the other, the tech-heavy Nasdaq just stumbled. So what's going on here? Well, this wasn't just random noise. It was a massive rotation of money. In the next few minutes, we're going to break down the two huge stories that pulled the market in completely opposite directions and, more importantly, what it might mean for you.
This slide just says it all, doesn't it? I mean, look at this. On the left, you've got the Dow, the old guard, soaring over 550 points to a brand new record. And then on the right, you have the Nasdaq, home of all the tech darlings, finishing in the red. It's a perfect picture of a market with a split personality.
So how in the world does this happen? How can one part of the market be celebrating with champagne while the other is nursing a headache? Well, it all comes down to where the money was going. And as we're about to see, there were two very specific, very different stories pulling trillions of dollars in opposite directions.
Now this is fascinating. If you just looked at the S&P 500, you'd think, a flat day. I mean, up just 0.2%. But don't let that tiny number fool you. Because underneath the surface, more than 2/3, 67% of the stocks in the index were actually up. That tells you something huge. The weakness was incredibly concentrated in just a few giant tech stocks that were heavy enough to drag the whole average down.
And that right there reveals the big theme of the day. Wall Street is calling it the Great Rotation. People weren't just tinkering around the edges. They were actively selling the high-flying tech names that have been winning all year and plowing that cash into other parts of the market, the so-called value sectors.
And you can see that rotation in action, plain as day, right here. Look at where the money went. Classic defensive plays. Healthcare, up 2%. Energy, up 1.5%. Consumer staples, also solidly grain. Now look to the right. What was the only major sector to finish in the red? You guessed it, information technology. The contrast couldn't be more stark.
Okay, so we know money was flying out of tech. But why today? What was the trigger? Well, let's dig into the specific headlines that really put the brakes on that red-hot AI rally. The first crack appeared with news from Coreweave. Now, this is a really important company. They provide the essential cloud infrastructure that powers a lot of AI. They came out and basically trimmed their revenue forecast for the year, blaming some delays from a data center partner.
And the market's reaction? It was swift and it was brutal. The stock absolutely plunged, down 16%. That sent a real chill through the entire AI space, making investors wonder if, maybe, just maybe, the AI build-out was hitting a bit of a snag.
And just as that news was sinking in, bam! We got hit with punch number 2. SoftBank, the giant Japanese tech investor, revealed it had sold its entire stake in the king of AI chips, Nvidia.
And we're not talking about a small trim here. SoftBank cashed out to the tune of over $5.8 billion. Now, the sale happened back in October, but the news hitting the market today, well, when a player that big gets out completely, everyone pays attention. But here's the twist. SoftBank was quick to say, hey, hold on, this isn't us giving up on AI. Their CFO basically said they were cashing in their Nvidia chips to raise money to double down on their other massive AI bet, OpenAI, the company behind ChatGPT. So it wasn't an exit from AI, but a pivot within AI.
But you know how the market is. The reason almost didn't matter in the heat of the moment. The combination of the Coreweave news and the SoftBank sale just created this domino effect. Nvidia itself fell almost 3%. The main semiconductor fund dropped over 2%. And it dragged down other AI-related names like Micron and Oracle right along with it. Okay, so while all that drama was unfolding in the tech world, the rest of the market was getting a huge shot of adrenaline from a completely different place, Washington, D.C.
So this record-breaking government shutdown has been hanging over the market for 41 days now, but it looks like we're finally seeing a light at the end of the tunnel. The Senate passed a funding bill, and it's now headed to the House, raising hopes that this whole thing could be over very, very soon.
And that was the green light. That's all investors needed. Getting rid of that big cloud of uncertainty gave them the confidence to pile into those more economically sensitive stocks, the cyclicals, the value plays, and that is what fueled the Dow's incredible record-setting day.
This whole tale of two markets story is just perfectly captured when you look at the day's biggest individual stock movers. Let's take a peek at the winners and losers.
I mean, this table tells the whole story in miniature, doesn't it? The winners column is just full of these value and recovery plays. A pharma company, a media giant. And who's on the losers list?
It's a who's who of tech, led by our friend Coreweave, which we already talked about, and an ad tech firm, AppLovin. So, when you put it all together, what's the big takeaway? Today was really a snapshot of a market that's trying to rebalance itself. After this historic, crazy run, investors are finally starting to look at the sky-high prices in AI and ask, are these valuations stretched? And they're taking some of those profits and finding new homes for them in other less expensive parts of the market.
And that, of course, leaves us with the million-dollar question, or maybe these days, the trillion-dollar question. Was today just a one-day blip? A healthy little pause in the otherwise unstoppable AI rally? Or are we witnessing the very beginning of a much bigger, more sustained rotation into value that could define the market for the rest of the year?